Hello and welcome to another Trades and Tutorials video. This is Jeff Bish, president of MarketGauge.com, and in this video I am going to take a look at a couple of sector ETFs that have some interesting looking potential going into 2016 and maybe even before we get there. But before I get into the specifics, I want to make sure that if you are just finding us on YouTube, please subscribe to our channel. And also, if you're not already aware, this video will be hosted at marketgauge.com/tutorials, where you can find several other resources to improve your trading. And finally, if you don't already know, you can see this video in HD by using the settings in the lower right-hand corner. Okay, so what you're looking at right here is actually what we call the little big view section of marketgauge.com, and you can get there by going to the resources in the main menu, little big view, and then we're in the sector summary page. Now, in this sector summary page, we keep track of a number of different important things to help you determine which sectors are moving in a way that can be helpful to your trading. It just so happens that on the day I'm doing this, we see a number of sectors that are highlighted in terms of their phase. Now, I'm not going to go over all the definitions of phases, but if you come to this page, you'll be able to find more help on stuff like that right here. And what you do know, though, or what I can share with you, is that when the background is highlighted, it means it's changed phase. And in this case, a bullish phase means that we've got a 50-day moving average over a 200-day moving average, and now the price is also over the 50-day moving average. And we'll take a look at the chart for XLP in a second. So XLP just went into a bullish phase in just yesterday. This is all updated at the end of the day. And XLP hasn't really been that strong of a leader for very long. So this is a sector I'm not so sure everybody's paying attention to, but it looks like we should, and I'll give you further justification for that in just a minute. All right, so on this page we'll tell you what the markets are doing in terms of phases, and also if you've been watching this blog for any amount of time, you're probably also familiar with the bottom of this page where we aggregate all the sectors that we see in the table above and put them into this histogram look, and it gives you a quick read of how many sectors had a positive 6-month change at the end of each week. So right now you'll see there's maybe 1 or 2 here, and that would be these 1 or 2. We show 3 here, but this is a weekly update. So it's looking at how many have a positive 6-month change. So that's another way to get a sense of the health of the overall market. And again, if you read about how this works down here, it'd be a little more specific, but in a nutshell, if you've got the price under the 200-day moving average, or the 40-week moving average, which is this light blue line, then you really don't want to see less than 3 sectors that are less, or don't have positive 6-month change, where it's a bearish indication, and that's exactly where we are right now. So let's not forget that. But this video is about a couple of sectors here, and I'm going to take a look at a couple of these up here that that look like they might just try and move higher. And certainly if the market does move higher, especially going into the new year, these are ones you're definitely going to want to focus on. Now, the first one is going to be XLP, and the other one that is interesting is XLV. Now, this is still down over 6 months. It's perked up in the last 3 months, but you'll see in a minute why I think you might want to keep your eye on it. And the other one that might surprise us is XLU. Again, it's up just modestly over the last 3 months. It's not positive on a 6-month basis, but I'll show you why in just a second. All right, so let's start with XLP. Now, XLP, as you can see, yesterday went from below the 50-day moving average, which is magenta line, to above it, and that's why you got that phase change there. So correction back to the 50, and this gray line here is the 200, so that's how you wind up with a bullish phase. Now, the trend in this, if you get over the fact that it's been consolidating for the last 6 months, recently the trend has been somewhat positive. and that's encouraging for sure. But the indicators you're looking at down at the bottom of this screen is what I want to focus your attention on right now. So this indicator here is a price leadership line. So it measures whether or not the instrument is leading the market or lagging the market. And the simplest way to use this is if you've got the blue line, which is the shortest term leadership calculation, over the red line, then you're gaining in momentum in a way that may or may not show up in the trend. Now in this case, this is also going up, and this is going up, and the red is over the black. So everything looks very nicely in gear in terms of the price. And the bottom here is volume. All right, so we call these our triple play indicators. You can only get them here, and we'll probably be doing a little bit more about these next week. So keep your eye on the blog for more information about them. But for now, just know that this indicator down here is a volume leadership or a volume accumulation measure. And you read it the same way. If the blue line is over the red line, then the volume is positive. And you want to see them both going in the same direction. And this is why I'm saying this is a sector that you're going to want to pay attention to if it continues to move higher, even if it doesn't. This looks like it should be really good support. And with volume indicator indicating that it's under accumulation, this is a good place to look. So that's consumer staples. I haven't heard the media talking a whole lot about consumer staples. I like that too. So it seems to have quietly snuck up on the radar, and an interesting one to keep your eye on. So that compared to XLY, which had been doing quite well coming out of October. It was one of the leaders, and actually it's still up slightly for the 6 month, but it had been up much more than it currently is. However, look at the difference here. So with XLY, it has pulled back, fallen back under the red line. So this is not what you want to see. And the volume is kind of questionable, but you can see when the XLY was struggling near the top, you can see the volume faded off. So it's not surprising that this decline here has had some trouble turning around it and moving higher. So XLY, which it is a great level of support, but this is one that if it breaks down, you're really going to want to be careful with. All right. If it continues higher, we're going to keep an eye on the volume. If the volume perks up, that'll be great, but it's also got to get back up over this line. Over the red line. So let's take a look at XLU, which is utilities. And so the interesting thing about XLU, and this is something that most people aren't going to see because this is the volume indicator down here, which, like I said, is proprietary. And you can see that even though XLU has been kind of drifting lower, consolidating, its volume actually looks pretty good. And it would only take a little bit of up move here in the price leadership line to have them both looking good, and that would mean that a breakout of this 200-day moving average, while it might look kind of mundane, unexciting, could be an emergence of a new trend. Now this is XLU, this is utilities, doesn't usually get a lot of attention, and in an environment of rising rates, this may seem a little counterintuitive. In fact, I think it is, but sometimes that's where markets get surprised or decent opportunities arise. So keep an eye on this XLU, especially if it breaks that 200. It could have a little bit more behind it than most people are seeing. And then the last one I want to bring your attention to is XLV. All right, healthcare. So healthcare is incredibly compressed right between the 200 and the 50. Now, this has not been good for its leadership. Its leadership line is really mundane. That's not what you want to see. You want to see it breaking out and trending higher, something along the lines of this in here. So when it was breaking out here, it eventually worked its way higher. This continued higher, and this, while it wasn't extraordinary, told you it was under accumulation. But then when they both broke down in here, you knew there was trouble potentially brewing, and it hasn't really recovered since. That said, volume seems to have picked up, and it wouldn't take much for the volume to really look good. And if that happens when it breaks the 200, this is another area that I think you want to keep an eye on in 2016. So all of these, if I just to quickly review, XLP, XLU, so consumer staples, utilities, and healthcare, all of them, if they get back up over their major resistance that they're right under, look like they could be in a position to move higher. Prior to that, I wouldn't be too quick to act, because as I said in the beginning of the video, as a whole, the market is in very fragile territory from a group's or industry group point of view and under the 200. But here's a perspective you're probably not going to see anywhere else with these indicators and this general intergroup analysis, so I thought I'd bring it to you. And if you like it, keep your eye on the blog or your email for more information like this next week. In the meantime, have a very happy holiday, and I'll see you in the next video.